Okay, so this is the Reese company, and it gives us their unadjusted trial balance, and then it gives us the data to make adjustments, and it wants us to make the adjusting entries, and then it wants us to create an adjusted trial balance. So that's the whole process they want us to go through. So the unadjusted trial balance is the balance of all of the accounts as of July 31st, 2019, prior to any adjustments being made. Okay, that's what we mean by unadjusted trial balance. So this is what all the accounts balances are. And you'll see it's listed in that traditional order. Let's see, I'm gonna have to adjust this a little bit more so we can see all of our balances. This problem stinks a little bit because there's like tons of scrolling that we have to do up and down to see all of this. So I apologize, but it's just kind of the way it is. All right. So it's in that traditional order. We have assets, and then we have liabilities, accounts payable, unearned rent, then stockholders' equity, common stock, retained earnings, and then dividends, then revenues, and then expenses. That's always the order that a trial balance is in. So down here now, where we're going to make our adjusting entries, it gives us this data needed to determine our adjustments. And so the most challenging thing about adjustments is knowing when I'm supposed to be figuring something out versus when I'm just supposed to use the number they give me. Honestly, that's what always confuses people. This is when it's actually easier in real life because you know exactly what you're doing as the accountant, that you're calculating or not, or whatever. Whereas in a book, they give you information and you're always like, wait, did you give me all the information or am I supposed to do something with it, right? So that gets confusing. So the first one it tells us is depreciation of the building for the year is $6,400. So this one, it's just telling us the amount of depreciation. You might in the future see a problem that says something like the building cost $100,000 and it has a useful life of 5 years. So it's expecting you to take that 100,000 and divide by 5 to figure out the amount of depreciation. This one's just given to us. The amount of depreciation is $6,400 on the building. So depreciation entries always look like this. We debit depreciation expense for the asset in question. This is the building. And we credit accumulated depreciation for that asset. So whenever you're dealing with a depreciation entry, and remember, depreciation is us allocating the cost of that asset over its useful life. So each year, we're going to recognize that we have used up part of the cost of that asset, okay? So it's $6,400. So there's our first adjusting entry. We're recognizing the using up of $6,400 worth of that building asset. And so we're going to debit the depreciation expense and credit the accumulated depreciation. Were you able to get in? Okay. On the second one, depreciation of equipment for the year, $2,800. Again, it's just giving us the amounts. They're being nice to us because we're new to it. So our entry is going to be depreciation expense on the equipment and accumulated depreciation on the equipment of $2,800. Just like all other journal entries, adjusting entries still follow the same rules. There has to be a debit and a credit, and the debits and credits have to equal each other. Okay, that rule doesn't go away. All right, the third one, accrued salaries and wages at July 31st are $900. So accrued salaries and wages mean we get to the end of the month, we recognize that from the last pay period or the last payday when we paid our employees have continued to earn money, right? That because by working. So we've incurred this expense and we have to recognize the expense at the end of the month so that our income statement will be right. So it will show all of the expense we've incurred, even though we're not going to pay the employees till the next payday, okay? So if you have an employer that pays every other Friday, which is pretty normal, they'll have a certain amount of salaries and wages at the end of the month that have been earned by the employees and incurred as an expense by the employer, but have not yet been paid. So in this case, it tells us that amount is $900. So we're going to record this as an expense, salaries and wages expense, because that's an incurred expense. And then because we haven't yet paid it, we're going to record that as a salaries and wages payable. That's a liability account. So we're increasing the expense by 900, and we're increasing the payable by 900. Our next adjustment tells us unexpired insurance at July 31st is $1,500. This one's a little more confusing, okay? So unexpired means any prepaid insurance we have that we haven't used up. So it's telling us the amount that we still have left at the end of the year. So what we have to do to figure out the amount of the adjustment is we have to go up and say, okay, so the balance in prepaid insurance at the beginning of the year, or at the end of the year before adjustments, was $6,000. Now this is telling me at the end of the year that I have $1,500 remaining that's unexpired. So the question is, how much did I use up, right? If I had 6,000 and now I have 1,500, how much did I use up? And the answer is 6,000 minus 1,500, which is 4,500, okay? So that's the amount of insurance I used during the year. What I mean by used is I have had coverage for, right? If you think about how insurance works, you pay them and then they offer you like the protection of your property during that time you paid for. So if I paid for a whole year's worth, or I paid for more than a year's worth, then during the year, the question is, well, how much of that prepaid insurance did I use up? And in this case, it's 6,000 minus 1,500, which is $4,500. So we're going to debit insurance expense and we're going to credit prepaid insurance. Remember, prepaid insurance is an asset. So by crediting it, we're reducing the balance of that. And if it had a balance of 6,000 and now I'm crediting it 4,500, the new balance will be 1,500, the amount that's still left there at the end of the year. The next one is fees earned but unbilled on July 31st are 10,200. So again, we do work for people throughout the month. A lot of times we don't bill people till the end of the month. That's pretty normal for a lot of businesses. So what you do is you get to the end of the month, and so that your revenue will show correctly on your income statement, you go ahead and enter all that money you've earned, but you haven't got paid for yet. So the amount that we've earned is 10,200. So I'm going to debit my accounts receivable. That's money owed to me. That's an asset. And I'm going to credit fees earned. So again, sometimes you have to think of yourself as like a translator, and you're like saying, like, what is this statement? Debit accounts receivable 10,200 and credit fees earned 10,200. What does that mean in plain English? It means I earned $10,200, and so I need to record it, but I haven't been paid cash for it. So instead, I'm going to record it as the asset accounts receivable, money that's owed to me. So that's what we're saying there. The next adjusting entry, supplies on hand at July 31st are $615. So if I know how much I have at the end of the month, like an actual count of them, that's what they mean by supplies on hand. And I scroll up and I see that my supplies account is 1725. I know if I had 1725 and now I have 615, then 1725 minus 615, which is $1,110, is the amount I used. Does that make sense? So each time it tells us how much we have on hand, what we need to do is go back and compare it to what's on the unadjusted trial balance, subtract them, and the difference is the amount we used during the month. So I'm going to debit supplies expense and credit the asset account supplies. That's to show that I used up some supplies and I'm claiming them as an expense. Again, we've done this sort of transaction already in some of the stuff we've done. The last adjusting entry is rent unearned at July 31st is $300. So this must mean that I have a rental property or something, or equipment, something that I rent out to people and I earn rent on it. So again, I'm going to go up and look at my unearned rent account. Remember, unearned rent is a liability. That means someone paid me in advance for something they were going to rent from me. The balance of that account is $3,600. That's money I either owe them or rental of whatever I'm renting that I owe them. And this is telling me at the end of the month, the part that's unearned is only $300. So again, I'm going to subtract them. $3,600 minus $300 means I must have earned $3,300 worth of rent during the month. So I'm going to reduce my liability unearned rent by $3,300. And I'm going to increase my revenue account, rent revenue, by $3,300. And then I breathe a sigh of relief because all of my adjusting entries are done. I do scroll down and check my work just to make sure I didn't make a mistake, because there was a lot of moving parts there, and it would have been very easy, even for an experienced person, to make an error, right? Like, recognize that. This happened to me when I was learning Mandarin Chinese, and I was speaking with a Chinese speaker, and I was feeling like hyper self-conscious about all the errors I was making as I was trying to speak their language. I knew I just sounded like a total idiot, like as I was trying to speak the language to them. And so I was feeling down on myself. And then later I was like talking to my wife, telling her how stupid I was. And it occurred to me that I make a ton of errors all the time when I'm speaking English, and I just correct them as part of the natural flow of speaking. I screw up all the time. I use syntax error, I make syntax errors, I make grammatical errors, or I just can't think of the right word, right? It happens to you all the time in your native language. And then so it occurred to me that even when you're good at something, you make a lot of mistakes. You've just learned tools to correct it on the fly. And so when it's something new, you're still going to make a lot of mistakes, but you might miss those errors on the fly and then have to come back to them later and be like, oh, this is what I did wrong. And for me, the moments of correction are the moments of learning. When I have to go dig out, why is this wrong? Figure out why it's wrong, then I learn it. So like, don't get discouraged if you get a bunch of red X's, okay? Those are opportunities to learn. I'm so upbeat, right? That's what it sounds like, man. Don't feel bad when you suck because you're learning, right? But it's true, actually. But it still sucks to suck sometimes. It's discouraging at times. All right, so we've done all of our adjusting entries. So now we're going to scroll down here, and we have to determine the balance of the accounts affected by the adjusting entries and prepare an adjusted trial balance. If an amount box does not require an entry, leave it blank. All right, so what we're going to do is create an adjusted trial balance, which is really just our trial balance with all the adjustments added to it. So this is kind of lengthy and involves a lot of scrolling, which kind of stinks, but that's life, okay? Life stinks, then you die, right? That's it. That's I mean, it's not true. She's so upbeat. She corrected me the other day. There's a lot of really great things along the way, but sooner or later you get a kidney stone. It's miserable, and then, all right. People don't die from kidney stones usually, just so you know. It just hurts. All right. So so the first step to me is to put all the account names in over here. And so honestly, all I'm going to do is I'm going to scroll up. I'm going to look at the unadjusted trial balance and just copy the account names down, except I have to be wary of the fact that a few accounts got added when we were doing the adjustment process. So accounts that didn't have a balance got added in, so we have to add those in. So I'm going to start with the asset accounts, and there's a bunch of them: cash, accounts receivable, prepaid insurance, supplies, land, building, accumulated depreciation on the building, equipment, accumulated depreciation on the equipment. Those are all of my asset accounts. So I'm just going to look at these: cash, accounts receivable, prepaid insurance, and scroll down and put them in here. Cash, accounts receivable, prepaid insurance, supplies, land, building. So all I'm doing is bringing the same account names down from the unadjusted trial balance onto the adjusted trial balance. Why? Because it's going to have all the same accounts plus any we added during the adjustment process. accumulated depreciation on the building, equipment, accumulated depreciation on the equipment. And then I'll probably want to look at my adjustments and see if there were any asset accounts that were added during that process, and there weren't. Okay, so that's all of my asset accounts right there. I'll give you guys a few seconds to catch up if you need it. Next, I'll move on to my liability accounts. There were only 2 on my unadjusted trial balance. So I had accounts payable and unearned rent. And then I'll look up at my adjustments and see if there were any liabilities added. And there was a salaries and wages payable that was not on the unadjusted trial balance, but in the process of doing our adjustments, we've added that. So there's going to be a balance in that account. So it has to go on our adjusted trial balance. So again, remember the kind of warning I gave you about this chapter being hard. Really what it's doing is it's testing my ability to do the things I learned in the first 2 chapters, which is recognize, oh, that's a liability account. It goes with the liabilities. So you have to recognize what each type of account is. That's challenging when you haven't done a lot of it. Okay, so it's not as much introducing new things as it's sort of expanding upon what we've already learned, except for the idea of the adjustment is the new thing, I guess. All right. Once I've got my liabilities, I'm going to go back up to my unadjusted trial balance, and then I'm going to look and see my stockholders' equity accounts, common stock, retained earnings, and dividends. So I'll go down to the adjusted trial balance and I'll add those: common stock, retained earnings, dividends. No other stockholder equity accounts were added during the adjustment process. It's just not normal to do that. Okay, mostly it's revenue and expense accounts that you'll see, and liability accounts that you'll see getting added during the adjustment process. That's the most normal. Again, if you think about the whole purpose for adjustment, which is to recognize revenue and expenses that we've incurred or earned during the month, but have not yet got money on, received money on, or to recognize revenue or expenses that we were paid in advance for or had paid in advance and now have actually incurred or earned, you'll notice that every adjusting entry had a revenue or expense as one part of it, right? So that's what we're doing here. All right, so we've got all of our revenue. Oh no, now we've got our stockholder equity accounts. So we're going to go to our revenue accounts up on the unadjusted trial balance, and the only one they had on here was fees earned. So I'll put that down onto the adjusted trial balance, and then I'll recognize that I had one more revenue account get added during the process of adjustment that was called rent revenue. And now I'm ready to move on to my expenses. And so I had a bunch of expenses up here: salary and wage expense, utility expense, advertising expense, repairs expense, miscellaneous expense. Plus, during this whole process, I added depreciation expense on the building, depreciation expense on the equipment. We already had salary and wage expense. Insurance expense wasn't on there, so now we've added that. And supplies expense wasn't on there, so we've added that. So luckily, instead of trying to keep track of all that, because for whatever reason, this dumb problem puts them all in a weird order. But if you do the drop down, there's only one expense offered in each of the lists. So salaries and wages expense, followed by utilities expense, followed by advertising expense. And I have no idea how they chose the order for this problem. Depreciation expense on the building, repairs expense, insurance expense, depreciation expense on the equipment, supplies expense, and miscellaneous expense. So we've got all of our account names in our adjusted trial balance. Now we just need the balances of each account, okay? So to find the balance, what we have to do is take the unadjusted balance and add or subtract any adjustments as appropriate, and that will give us the adjusted balance. And there's no shortcut way. We just have to go through each one, say, here's what the balance was before, here's what the adjustment was, here's the new balance of it. Sometimes the balance before, there'll be no adjustment. So the balance before, in the unadjusted trial balance will be the same as the balance in the adjusted trial balance. Other times, the things we added, they had a balance of 0 before. So the adjustment, that will create the new balance, okay? So I'm just gonna walk us through it step by step. What I actually do is I create like a little, like a little T account over here. And it sometimes makes my life a little easier to do that. Okay, so I'm gonna just go down the line. So my first one is cash. So I scroll all the way up to the unadjusted trial balance. Cash had a debit balance of 10,200 right there. Then I'll scroll down to my adjustments and say, did I ever impact cash? And since I've told you before, there's never cash in adjusting entries. The answer is no. So the balance, the adjusted balance of cash is 10,200. Now for accounts receivable, scroll all the way up. This is the part I hate, this scrolling business. And say it had a balance of 34,750 on the debit side. And then I'm going to scroll down and look at my adjustments and say, was there ever a change to accounts receivable? And I can see right here, I did a debit adjustment of 10,200. And so my new balance why are you being dumb? Is 44,950 on the debit side. So all I did was take the debit balance up here, 34,750, and added the debit adjustment to that account right here. So my new balance, 44,950. And I'm going to repeat this process for every single account. And yeah, there's a lot of them, so it's going to take a minute. Prepaid insurance. Prepaid insurance has a debit balance of 6,000. Then I scroll down and I say, oh, look here, I did an adjustment to prepaid insurance, a credit of 4,500. So my new balance on my prepaid insurance account is a debit of 1,500, right? So this isn't something new, right? We've done T accounts or ledgers or whatever you want to call them over and over already. You've had practice at this, and that's all we're doing is finding out the balance of each account. So prepaid insurance has a debit balance of 1,500. Supplies had a beginning balance of 1,725 on the debit side. And then we can go down and look at our adjustments and say supplies was credited 1,110. So the new balance of our supplies account is a debit of 615. Land had a debit balance of 50,000. There were no adjustments to land. So it's going to continue to have a debit balance of 50,000. Building had a debit balance of $155,750. There were no adjustments to building, so it will continue to be 155,750. The accumulated depreciation on the building, it had a credit balance of $62,850. Remember, it has nothing to do with value. It means we've already expensed that much of the cost. About cost, not lost value. No, it has nothing to do with what we owe on it. So it's just the cost. We could have paid cash for it and owe nothing on it. So what we're doing is we're saying this building cost me $155,750. And I don't know what math they did, but let's say we said the building has a useful life of 20 years. So we take the 155,750, divide it by 20, and that tells us how much each year we're going to recognize as an expense, so that we're going to spread that expense or cost of the building out as an expense over its whole life, a little bit each year, rather than recognizing it all as one big expense right now. So this amount, the accumulated depreciation, is the amount we've already expensed up to this point. Okay, so that's the balance of that account. And then this year, when we did our adjustment, we did another 6,400 on the credit side. So the new balance of that will be 69,250 on the credit side. Equipment. And don't feel bad, like it's a weird abstract concept, okay, until you do it all the time. Yeah. Yeah, then it's fully depreciated. So when your cost equals your accumulated depreciation, we'd say that asset is fully depreciated, and we don't take any more expense on it after that. And we don't, so yes. All right, so our equipment has a debit balance of 45,000. We didn't make any adjustments to equipment, so it still has a debit balance of 45,000. Our accumulated depreciation on the equipment has a credit balance of 17,650 to begin with on the unadjusted trial balance. And then we made an adjustment of a credit of 2,800. So the new balance of that account is 20,450 on the credit side. Accounts payable. So again, each time I go up to the unadjusted trial balance and I start with that balance, accounts payable had a credit balance of 3,750. And then you can see there were no adjustments to accounts payable. So it still has a credit balance of 3,750. And do you recognize that in this process, the likelihood of error is like super high? Because we're scrolling up, we're finding a number, then we're having to look through our adjustments and see, did we make any changes to this account? The chances of missing one or whatever are high. So it's okay. You just have to work through that. All right, so the next one we're doing is unearned rent. So I'll scroll up. I'll see that my unearned rent account was 3,600. On the credit side, then I'll scroll down to my adjustments and say, I debited unearned rent 3,300 in the adjustment process. So the new balance of unearned rent is a credit of 300. Salaries and wages payable. There was no salaries and wages payable up here on the unadjusted trial balance because we didn't have any. But then we made an adjustment So salaries and wages payable, a credit adjustment of $900. So the new balance of salaries and wages payable will be a credit of 900. Common stock had a credit balance of 60,000. No adjustments were made to it, so it still has a credit balance of 60,000. Retained earnings had a credit balance of 93,550. No adjustments were made to it, so it still has a credit balance of 93,550. Dividends had a debit balance of 8,000. No adjustments were made to it, so it still has about a debit balance of 8,000. All right, fees earned had a credit balance of $158,600. So that's all the fees revenue they've earned so far this year. We'll come down and look at our adjusting entries. And we'll see that we did have an adjustment to fees earned, a credit of 10,200. So the new balance to that account is 168,800 on the credit side. Rent revenue, there was no balance in the rent revenue account before. We had an adjustment to recognize the rent revenue we earned during the year of $3,300 on the credit side. So the new balance of that account will be a credit of $3,300. It's a little tedious, isn't it? Don't worry, in real life, computers do most of this for you, okay? Now, there's nowhere near as much, what's that? Salary and wages expense. So we had a debit balance of 56,850 on the unadjusted trial balance, 56,850. And then we did an adjustment, a debit of 900 to salaries and wage expense. So the new balance is 57,750 on the debit side. Utilities expense had a debit balance of 14,100. Actually, I don't need to put it in here because there was no adjustment to it. So it had a debit balance of 14,100. There was no adjustment to utilities expense. So it still has a debit balance of 14,100. Advertising expense had a debit balance of 7,500. We didn't make any adjustments to advertising expense, so it's still going to be 7,500. Depreciation expense on the building had a zero balance, but we did make an adjustment to it, a debit of 6,400, so the new balance will be a debit of 6,400. Repairs expense had a balance of 6,100 on the debit side. No adjustments made to it, so it will still have a balance of 6,100 on the debit side. Insurance expense had no balance, so it wasn't there on the unadjusted trial balance, but we did make an adjustment, a debit of 4,500, so the new balance will be a debit of 4,500. Almost there. Depreciation expense on the equipment had no balance up on the unadjusted trial balance. Don't get the accumulated depreciation on equipment account confused with the depreciation expense on equipment account. Happens a lot in real life, okay? So there's no balance on depreciation expense for equipment. We did an adjustment, a debit of 2,800. So the new balance will be 2,800. Supplies expense There was no balance up on the unadjusted trial balance. We did an adjustment to supplies expense right here, a debit of 1,110. So that's the new balance of the account. And finally, a miscellaneous expense, which had a balance, a debit balance of $4,025. There were no adjustments to it, so the balance is still a debit of $4,025. All right. Now we just have to add up all our debits and add up all our credits and pray for the love of all that's good in the world that they equal each other, so we don't have to go digging through this to find an error, right? If we want, since we have unlimited checks, we could check this first and see if they're all right. And they all are, so now we know that whatever we add up is going to be good. Whereas, but you don't always have that, right? Like on an exam or something, you may not have the checks. So we'll go ahead and add them up. It's a good thing to be in the habit of adding up both sides of your trial balance, because you could just add up one side and then hope it's right and put it in both the debit and credit side and be good. But it really is a good thing to be in the habit of adding up both sides and seeing that they match. That way, if you do have an error, you can find it on your own without having to use a check, or with in cases where you don't have a check. You can, that's one way to find out. So I'm just putting in all of the debits. I got 379,800 on my debit side. Anybody finish ahead of me? Is that what you got? And which one? 8? See? Did you get 420,300? Good. So let's check our credit side anyway, even though we know it's right because we did our little checks. Let's, again, just be in the good habit of. One thing I like about using Excel for this is if you do make an error, you can go back and see everything you've entered, as opposed to with a calculator going like, which one did I miss, right? So Excel's a nice tool if you can get used to it. Hey, it matches. That's a good sign. Now, if I hadn't done a check and I'd made that error, what I would have found is that my credit would have been bigger than my debit, right? And I would have had to go back up and look through each one until I thought, oh, okay, I missed a 0 there, right? And so remember that problem where you had to like figure out what the error was? Was it a transposition, right? That's why they have you go through those problems, because making errors is so common. Getting good at finding your error is a helpful thing. So our total is 420,300. And we should be golden, 100%.